And I want to spend a little time again on this podcast discussing Bitcoin and why it's not an inflation hedge, because it is being marketed as an inflation hedge, and that is part of the lie, right? That's how they're trying to convince people to buy it. Now, yesterday or over the weekend, Bitcoin prices collapsed from, I think, a high of $42,000 on Sunday night down to a low of about 30,000 on Monday morning. So that was a 28% decline, basically in a 24-hour period in the price of Bitcoin. Now, I know what everyone's going to say, but Peter, look, it was still 30,000. So had you bought it, weeks ago or months ago, you're still making money, which is true. But the point is, something that can drop by 28% in less than 24 hours is not a safe haven. It is not a store of value. It is a highly speculative asset, and I'll put asset in quotes, but Bitcoin is not a commodity, so it can't be a hedge really against inflation, and it's not an investment. And the crazy thing about it is, and I've mentioned this before on the podcast, but the most ridiculous things I've ever heard with respect to investments or respect to gold are the things that the Bitcoin proponents are saying now to try to justify the price of Bitcoin. Now, if you want to think about an inflation hedge, I just talked about what's happening to commodity prices, right? The price of wheat is going up, and corn and soybeans and oil. Now, what if you want to hedge against that, right? What if you're going to buy wheat in the future, right? Apart from going into the commodity markets, right? Because you could buy a futures contract and buy wheat futures or something like that, where you can buy wheat today for future delivery. But apart from, commodities, futures, which of course involve counterparties and those type of risks. But if you want to hedge the cost of wheat in the future, you could in theory buy the wheat now and take delivery and hold on to it, and then you could consume the wheat in the future. Or with corn or oil, you can get a big tank of oil in your backyard and just put all the oil you think you're ever going to need in there, and then instead of going to the gas stations in the future, you could just fill up your own tank because you bought all this oil and you stored it. But the problem is that's expensive to store oil, to store wheat. And of course, if you store wheat long enough, it goes bad. You probably have to do things with it to keep it from going bad. But what makes gold such a great store of value, such a great hedge against inflation, is the fact that gold is very easy to store because it's very valuable. You can store, a lot of value in a shoebox. Right? You need a lot of land to store any kind of valuable amount of wheat, but you could store, acres and acres of wheat in your sock drawer if you're storing gold. Because if you have gold, you can always buy wheat. Because just like bakers always need wheat, jewelers need gold, right? Computer chip manufacturers need gold. The dental industry needs gold. The aerospace industry, there's all sorts of demand for gold, the commodity, the metal, just like there's all sorts of demand for wheat, right? So when you are holding your gold, you are storing the future use of that metal by the people who need it. And there is a historic price relationship between one commodity and another commodity. So how much wheat should an ounce of gold buy. There is a historic relationship between those two commodities. And so if you're afraid the price of wheat's going to go up, but you don't want to buy wheat because it's expensive to store and it might rot, well, you can buy gold. Because if you have gold, you can always buy wheat based on this historic relationship. That is not the case with Bitcoin. Bitcoin is not a commodity in and of itself. So there is not an end user for Bitcoin. You don't use Bitcoin, you don't consume Bitcoin, you only speculate with Bitcoin. So if you're going to buy Bitcoin, there's nothing based on history that would say that you can buy any wheat or any oil with your Bitcoin. You may not be able to buy anything with it because the only way you can sell it is if somebody else wants to gamble that the price is going to go higher. Now, right now, there are people who are willing to gamble on it, but how do you know in a year or 5 years or 10 years that anybody will be dumb enough to make that gamble? Because right now, there are only two types of people who are buying Bitcoin. There are the people who don't know it's worthless, but they're buying it anyway. And they're the people who know it's worthless, but don't care. And they're buying it anyway because they think the price is going to go up. Well, eventually, the people who are buying it because they don't care that it's worthless, eventually they're going to care. And the people who don't know it's worthless, eventually they're going to figure it out. But of course, by then it's too late because the bottom would have already dropped out of the market. But that is where we're headed. So all these people who keep saying, I can store my Bitcoin and buy things in the future, are missing the point that it's not a store of value, because you cannot store what you do not have, right? Wheat has value, oil has value, gold has value as a metal. So I can store it. I don't have to use my gold today. I can use it in the future. And I don't have to use it myself. As long as somebody else needs to use it, they can buy it from me, right? But nobody needs to buy Bitcoin. So nobody has to buy your Bitcoin unless there's somebody who wants to gamble on future price appreciation, and you have no idea that that's going to happen. But, not only does the Bitcoin crowd have to say a bunch of nonsense about gold in order to justify why Bitcoin is just as good, they also say a bunch of nonsense about every other asset class, like stocks, like real estate, like bonds. For example, I'll say the only way that Bitcoin goes up is if somebody else buys it, right? So you're just speculating, you're buying Bitcoin, and the only way you can make money is if somebody else buys it and pays a higher price, right? Because, it doesn't have any real value. And what the Bitcoin people always say is, well, that's the same with any asset. They'll say that's exactly the same with gold. No, it's not the same with gold. Some people may buy gold because they think the price is going to go up, but a lot of people are buying gold because they need gold. When a jeweler is buying gold, he doesn't care if the price goes up or down. He just needs the gold to make his jewelry. Now, if he thinks the price is going to go up, he might load up on gold so he can use it to make jewelry in the future. He might want to hedge by holding more inventory, but he ultimately needs the gold to make it into jewelry. The same thing with the computer chip manufacturer. He needs the gold to conduct electricity. Doesn't matter whether the price goes up or down. No, it matters because it's an input cost, and so it factors into his production costs and his prices, but he has a real reason to buy it. You see, all commodities, which would include gold, are either consumed or used. Bitcoin is neither consumed nor used. You don't do anything with it. But when you try to compare it to an actual investment, because gold itself is not an investment, it's a commodity, it's a metal. If you buy a gold mining stock, well, then you're making an investment. You're investing in a company that mines gold or explores for gold and hopes to mine gold, right? But other types of investments are bonds and real estate. And the Bitcoin guys keep saying that, well, buying Bitcoin is no different than buying any of those investments. They'll say you're just buying the investment because you want the price to go up and you need somebody to pay a higher price. And so buying Bitcoin is just like buying a stock because it's all about selling it at a higher price. And that is not true. That's because so many people who are buying Bitcoin have no experience with investing and they don't know anything about investing. Although, given the environment that we're in now, the Federal Reserve has so distorted things that there's a lot of crazy stuff going on in the stock market and the bond market that helps to validate the crazy stuff going on with the Bitcoin market.